What if the secret to making millions in the market wasn't genius but radical robotic obedience to a few simple rules? In 1983, a strange advertisement appeared in the Wall Street Journal. It wasn't selling a hot stock tip or a get-rich-quick scheme. It was an application for a commodity futures trader position, promising that the successful candidates would be taught the methods of the legendary Richard Dennis, the man who turned 600 into 200 million. The catch: prior experience wasn't necessary, and applicants had to answer, in 10 words or less, what makes you tick. Over 1,000 people responded, a motley crew of investment bankers, taxi drivers, PhDs, and blackjack dealers, all dreaming of learning the secret. 23 were chosen. Within 4 short years, this group, who became known as the Turtles, would collectively generate over 100 million in profit. The results were staggering. Curtis Faith, a 19-year-old kid, made $31.5 million by age 23. Jerry Parker, a quiet accountant, went on to manage billions. Liz Shivel, one of the few women, retired at 45, a millionaire. They weren't born traders or financial geniuses. They were simply proof that trading success is made, not born. Through the ultimate case study in discipline. This story is the foundational core of trading psychology stick, dedicated to finding the mental models that truly work. Before we dive into the secret, remember this is an educational deep dive, not financial advice. Trading involves significant risk. Let's uncover the secret that made it all possible, starting with $1 million argument in a Chicago restaurant. The $1 million bet: are traders born or made? Picture the scene: Le Colonial restaurant in Chicago, 1983. Amidst the soft jazz and expensive wine, Richard Dennis, then 34 and a market legend, was locked in a ferocious argument with his best friend and trading partner, William Eckhart, a brilliant mathematician. Eckhart was utterly convinced that trading couldn't be taught. He insisted it was an innate talent, like having perfect pitch. You either have it or you don't, Eckhart jabbed. Dennis, having heard the same tired argument from every corner of the financial world, vehemently disagreed. He believed success wasn't special, but systematic. Bill, I could take anyone, and teach them to trade exactly like me. Trading is a skill, not a talent. The debate turned into a wager for their reputations. Dennis was determined to prove that great traders are made, not born. The selection site. Choosing ordinary people. The pool of over 1,000 applicants was diverse, including doctors, lawyers, gamblers, and housewives. Dennis's instruction to his assistant was simple: I don't want financial experience. I want blank slates. He was looking for people who could accept and follow instructions without the self-sabotage of their own ego or prior market baggage. The selection process was designed to test temperament over intellect. Could the applicants handle being wrong 60% of the time? Did they prioritize probability over prediction? One key question filtered out roughly half the applicants instantly. If you could have a 55% chance of making $100 or a 45% chance of losing $100, would you take the bet? Most said no, focusing on the potential for loss. Dennis wanted the ones who said yes, who understood that consistently profitable trading meant having a positive expectancy, even if it required accepting calculated losses. The 23 chosen included Michael Cavallo, who simply liked rules; Jerry Parker, the quiet accountant seeking systematic wealth; and Curtis Faith, the 19-year-old programmer who saw trading as then statements with money attached. Dennis named them the Turtles, symbolizing his intent to grow them. Slowly, systematically, perfectly won the system that made 200 million. Gathered at the Chicago Board of Trade building on January 2, 1984. The nervous cohort received their shocking introduction to trading. Forget everything you think you know about markets. Dennis began. Your opinions are worthless. Your predictions are garbage. Your intuition is your enemy. He immediately laid the groundwork for their counter-intuitive success. We're going to lose money 60% of the time and get rich doing it. He explained they were not investors chasing bargains, they were trend-following traders. He then wrote T-Kami-Tri on this team on the whiteboard, detailing the simple rules that made him 200 million. Entry rules based on 20-day or 55-day breakouts. Exit rules with a non-negotiable initial stop at 2NN being the average true range, and stops that were never to be moved away from the position. The system was entirely contained on one board. When the Turtles asked about fundamental analysis or news, Dennis was clear. Worthless. Price already contains all the information. For 8 hours, Dennis systematically destroyed every trading myth, teaching them that the difference between success and failure wasn't information. It was execution. The position sizing revolution. 90% of success. Day 2 revealed the core secret. Dennis opened 2 briefcases. The first, full of charts, indicators, and analysis, represented the entry signals, which he stated were worth only 10% of success. The second held a single sheet of paper with a formula, which was worth 90% of success. Position sizing. He demonstrated why traders go broke even when they're right. As an amateur with a 100,000 account who randomly buys 10 gold contracts risks losing 50% of the account in a normal volatility move. The turtle, following the formula to risk 1% of the account, loses only 2%. The difference was survival. Over 100 trades, the amateur's random sizing leads to an inevitable single-double loss that wipes them out, even with a 50% win rate. The turtle, with a systematic 40% win rate and controlled sizing, doubles their account. Dennis concluded, position sizing is the strategy. Everything else is just implementation. The formula used an average true range to adjust the position size based on the market's volatility, ensuring the same percentage of the account was risked whether trading high volatility sugar or low volatility bonds. The pyramiding principle in the grind on day 3. The turtles learned the fastest way to get rich adding to winners, or pyramiding. While traditional traders take profit too early, turtles systematically added units to a winning position at every half-end profit interval, maintaining the initial total risk while drastically increasing exposure to the trend. This method gave them 5 times the profit of traditional traders on the same move. The math showed that even if the market reversed and the last units added lost money, the initial gains were so large that the net profit was substantial. But Dennis delivered a heavy warning: pyramiding only works with trends, and trends are rare. This meant the turtles would spend the majority of their time systematically losing small amounts, patiently enduring the grind while waiting for the few huge trends that make their entire year. The first major trend, a breakout in heating oil, proved the system's power. Curtis Faith pyramided aggressively and made $3.2 million on that single trade. However, the subsequent 4 months were brutal: 75 losses in 108 trades. This period of systematic losing forced the turtles to find psychological anchors. Tom Shanks wrote, "The system works 10 times daily." Liz Shevel covered her P&L column with tape and checked results only on Fridays. Traders who, like David Shevel, tried to improve the system by skipping signals based on intuition were disciplined. They missed the next big trend that month, earning only a 5% gain, while the faithful turtles earned 40% to 60%. David's classic mistake, as Dennis noted, was optimizing for avoiding pain, not making money, opposite goals in trading. The $1 million mistakes in Black Monday. The experiment taught indelible lessons about error. Jim Melnick made a $450,000 mistake by calculating position size incorrectly. His first instinct was to close immediately, but he held because the stop hadn't been hit. The market reversed and the double-sized position turned into a $1.8 million profit. The lesson: trusting the system beats emotional decisions even after a mistake. Conversely, Philip Liu, the MIT graduate, quit after his attempts to improve the system with logical filters led to the worst results. Dennis's brutal conclusion: intelligence without discipline is worthless. The ultimate test arrived on Black Monday, October 19, 1987, when the Dow crashed 20%. Tom Shanks lost $13 million in one day. While the world panicked, the turtles followed their rules. Jerry Parker was perfectly positioned and made $5 million on the worst day in market history. The following morning, with his account down $3 million, Shanks' system generated a buy gold signal. Every cell in his body screamed, "Don't trade," but he obeyed the system, and within 2 weeks, he recovered his losses. Curtis Faith summarized the lesson: Black Monday wasn't a disaster. It was a filter. It filtered out everyone who traded with emotion, rewarding only those who traded with systems. The Turtle Diaspora and Modern Application. By 1988, the experiment proved Dennis's bet traders are made. The turtles scattered, taking the systematic DNA with them. Jerry Parker founded Chesapeake Capital and built a $1 billion fund. Paul Rabar traded the exact 1983 system for 40 years. Their success continued even when trend following was dead from 2011 to 2019. Jerry Parker endured several losing years, e.g. 30% in 2016, while changing absolutely nothing. His patience was violently in 2020, and his fund 20 generated and he need 8% of 2021 and 35% of 2022. The lesson: systems don't fail, patience does. The second generation of turtles, like Salem Abraham and Marcus Chen, the crypto turtle, proved the system is timeless. Chen took the original rules to cryptocurrency 16, modifying timeframes and position sizing for 24/7 markets, and turned $500,000 into $50 million in 5 years. Modern turtle technology has automated signal calculation and position sizing. Abraham manages $500 million from a barn, eliminating human error. But the core principles remain: risk percent per trade, size by volatility, cut losses mechanically, ignore all noise. The ultimate turtle wisdom: the money is the easy part. Staying human is the challenge. Your job isn't to be worthy, it's to be systematic. Your 90-day transformation blueprint. Curtis Faith's 90-day blueprint is the exact path to becoming a systematic trader. Days 1 3. The foundation phase: system design. Write your full rules on one page. Backtest 100 trades to verify positive expectancies. Aiming for 35-45% win rate. Start daily meditation and write your trader's constitution. Habit building practice. Order entry and position sizing on a demo account. No only. Days 31-60. The execution phase. Complete 40 paper trades with perfect rule adherence. This is where the real test hits. You must take every signal, even the ones that don't look good. By day 60, you must demonstrate emotional control. Days 60-90, the integration phase. Micro real money. On day 61, fund a real account with tuition money. See an amount you can lose without emotion. Trade at 10% of your normal position size. First real trade reality. Your hand will shake, but you must place the trade and walk away. Gradual scaling. If execution is perfect, scale to 25% size. If you violate a rule, scale back to 10%. The goal by day 90 is 50 pulse real trades, 0 emotional trades, and the full internalization of the systematic mindset. The turtles proved ordinary people can achieve extraordinary results. The final challenge from Curtis Faith: will you actually do it? Knowing and doing are different universes. Richard Dennis's final secret: I didn't really teach them to trade. I taught them to trust. Trust the math. Trust the process. Trust themselves. Well, your final choice. Day 1 begins now. You've absorbed 40 years of wisdom, the exact system, the psychology, and the blueprint. Right now, fortunes are being made by systematic traders who were once exactly where you are. They simply made a decision and followed through. Your first 3 actions are: tonight, write your trading rules on one page. Tomorrow, start your trading journal and begin trade number 1 of your 100 trade challenge. This week, commit to perfect discipline. The math doesn't lie, and the edge is real. The only variable is your discipline. In 90 days, you'll either be a systematic trader or you'll still be searching for secrets that don't exist. Your transformation starts with 3 words. Day 1 begins. The market is waiting.